Hello, traders. I had a subscriber, Adam to be specific, asking if higher time frames respect the breaker system. And so I was kind of dabbling around with that just a little bit this morning. And we've kind of been looking at the possibility of when the last candle, the candle that runs liquidity, is red instead of green, that is the breaker. And if you want to use it that way, you can. That is not the way ICT taught me to use it. Instead, he uses the last down close before the run on liquidity. So, like in this case, it would be this one right here. Okay, so if we use that one, when candle bodies start closing below, then you're good to go short. This one, the fair value gap occurred before it. If we use that one, then that would be fine. But you want to wait till candle bodies close below. And then we came down and we ran liquidity. Okay. Also, I want to point out there's a little fair value gap here that was respected and we had more upside. Now, this is a weekly chart. Up here, we're at all-time highs. We started falling down. This is when the tariff news started coming out, and we fell and we fell and we fell. Oh my goodness, did we ever fall? Last up close candle before the run on this liquidity is right here. Where did we stop? We took it out by only a few ticks. Look at that. And we reversed on a dime. Coincidence? And this one here, once we started closing below, we came down and we took out this liquidity right here. A short-term liquidity, minor buy side, minor sell side rather. We took it out by only a few ticks. We started back up. We came down. We respected this fair value gap. Even that candle body respected this little fair value gap here. And then we went up and we went up and we went up. And finally, oh man, we ran liquidity again. And then the last down close candle before this run on liquidity is right here. When the tariff news came out, we moved away with a fair value gap. Another one, we gave an opportunity to enter right here. And that's when we went far, far south and took out this possible breaker on a weekly chart. We marked the last, well, I guess it would have to be this one because this is the same candle. So that's the same situation. So we would have to mark this one as the breaker and we'd make it the mauve color. So that's our bullish breaker. Candle bodies start closing above. I guess we'd be good to go long the fair value gap here. And so where might we be heading? I think we're going to take out that high for sure. Maybe the all-time highs. We're definitely going to take the all-time highs. I just don't know if we're going to consolidate here for a month before we do it. But we're taking them out. That's just the way the market works. So that's what they look like on this weekly chart. I would say they are referring to those breakers. We are having reversal patterns that are respecting breakers. So let's try a different time frame. Let's go to a daily chart. I'm going to just take these all off. We'll start from scratch here. Okay. So let's just do this little section here. We'll pretend like it's just like a regular old 1 minute chart or whatever. So the highest point is right here. Last down close before the highest point is right over there. So we'll make that our our bearish right here. Make it orange. If you've seen the last couple of days, the way the breakers worked out, so they consolidated a while. Maybe they broke below. They pushed back up into it and even went a little higher before they decided to go. Now this is several days, but if you look at Thursday's price action, we had almost the exact same pattern here, where we were consolidating and we would come and take out a little bit of liquidity and then go right back up. But we never made a higher high. And this was in minutes on Thursday. I think it took like 30 minutes before it finally just started falling out of bed. But then we did have a few candle bodies close above. But that's okay because we're looking for that lower high when we're on the upside. So from that perspective, we did have them start closing below here. We did push away with a fair value gap. You could say we took out some liquidity here. We went back up, we respected it, came back down, took out this liquidity, went back up and respected it again, and then we made a higher low. Went up, took out this liquidity. So now we would have a new breaker right here. Right there. Even though this is the highest high, we just took out this liquidity right here. I think we could still technically use that one if we were using we would have to. I apologize. We would still have to use this one, but we would have to wait for it to get validated again by candle bodies closing below again. So we push through with a fair value gap. We have another fair value gap. We're trying to enter somewhere around here. Preferably, we would put our entry one tick below the high of these candles when we're going to the downside. We wouldn't have gotten filled yet. We would have gotten filled here, that finally. Or you could just jump in on a green candle and hope it doesn't go any higher than that. But, so from that perspective, we respected. We did take out some liquidity here short term. Push, tried to make a higher high and did not. And then we started down. Okay. And we continued down. Here, we attempted to validate this breaker, couldn't do it, and then continued our downward path until finally we hit a bottom. And that made this this one right here, our bullish breaker. Let's make it purple. I should have just done them both that way. The mauve color that I like to use for bullish breaker. Okay, so we came up, we tried to get through it. We came down, we made a higher low, and then we started pushing up through it. And looky there. We made a little fair value gap right here. The market gave us opportunity to enter. Tried to push all the way through, but candle bodies definitely respected it. And then here we go on up. What we'll see in a smaller time frame is a lot of times this breaker may be respected, and then it'll come back down. I'm just curious if I put on this weekly chart right here, and I mark out this next weekly high, how's that going to correspond with that breaker? I'll make it blue. I think that's pretty close to it. The high is 2025. A little bit lower. 2025. And this is just a kind of analysis I do on the weekends, just to kind of give me an idea of where I think the market's going to go. Looking at those higher time frames as though they're a shorter time frame is really beneficial. So we validated this breaker on the daily chart. We validated it. We put up a fair value gap. We respected the fair value gap. And then now we're trading higher. So this weekly high and that breaker from way back over here, they're about to collide. We could push on through it again, or we could pull back. Maybe, who knows? What are we going to do? Be interesting to see. Can you use these to trade off of? If you've got very, very deep pockets, you absolutely can use these to trade off of. But I use the smaller time frames because I don't have deep pockets. if you can throw $1 billion worth of contracts at something and cover it with another couple of billion if you get in the hole, then yeah, trade these. I'm just not quite there yet. Maybe I'll get there one of these days. So yeah, I like it. I think we are respecting the breaker system here pretty well. This is the earlier part. Whenever we were putting up these, like that, where we stopped would be right here. I don't know if we could find a breaker that it was respecting here on the daily chart, but definitely on the weekly chart we were able to find that. And so here we can see, I think we respected the breaker there really well. This one's a little muddy, but it looks a whole lot like Thursday's price action. I think we even made a higher high on Thursday, but we definitely consolidated, pushed back above the breaker, and then revalidated it and went on south. Okay, so let's erase this and let's go to a smaller time frame still. Let's go to a 4 hour. All right. We can use this swing low right here on the 4 hour. Here's our run on liquidity. The last up close before the run on liquidity is right here. We're going to make that purple. Mauve, rather. Do one more. Right there. That's pretty close to where we need to be. All right. It's a little off, but it'll work for these purposes. Okay, so let's see if it fits our criteria. We made a higher low. Yes. We went up above. Candle body started closing above, came back into this fair value gap. Again, we did a little bit lower high, still respecting that fair value gap. And then when candle bodies start closing above, again, I guess then we'd be good to go long. If you tried to go long in this area, you wouldn't have gotten to the high. So it's a little more muddy here. I would say you would have to use something else as your shift in market structure. So that's what we're looking for, is a shift in market structure. If you were using something down here lower time frame, maybe that would have worked out. But on this, I mean, eventually, yes. If we were looking at a 1 minute chart and all these were candles, I mean, you would have got smoked there, but you could re-enter once we got above here. You could re-enter right here at this fair value gap. This one would have filled you, and you could have definitely got to that liquidity. Man, you're going all the way up there. You could have definitely taken some nice liquidity up above. This one here would have been nice to get, even that one possibly. So oftentimes on the 1 minute chart, if we come down and we retest below the breaker, you will get knocked out. But, you know, if you're doing this on a 1 minute chart and you entered somewhere around here, your stop would be below this fair value gap that pushed through the breaker. So maybe you wouldn't get stopped out. But on this chart, that would be a lot of money. The 1 minute chart, it may only be $200. So that's why we look at those 1 minute charts. Okay, so let's look at a downside move. Let's see what it looks like. Okay, so here's our highest point. And we're not going to use the very top candle, even though you could possibly. When you're looking for a breaker, you're looking for a shift in market structure, and that's why we mark the last down close. And it's going to look a lot similar to the daily, I would imagine. If you're aiming for just low-hanging fruit, ooh, yeah. I'm I'll mark the top of it too. Okay, so if you're just aiming for low-hanging fruit, we had one heck of a fair value gap. We could enter low-hanging fruit here, possibly here. Stop goes above here. We come back, we revisit. You could add. Low-hanging fruit would maybe be here or here. We could have got low-hanging fruit right there. And here. And there. Would we have gotten that one? I don't think so. I think we left that one for later. Let's put a line on it and see if we could see if we took it. Yeah, looks like we just barely missed it, which is fine. Okay, so then we hit here, and then all of a sudden we make a higher low. Ooh, that's a shift in market structure, isn't it? So now we have a bullish breaker. Right there. We'll just mark the high of it for now. And we pushed through with a fair value gap. We came back down and we revisited it. And where would we aim? The latest swing high. Boom. Possibly all the way to the breaker. We would not have taken it. We could go short there and aim for some of this lower hanging fruit, because you don't know at this point if we're going to go all the way back through the breaker or if we're going to stop at it. That's interesting, isn't it? And then ultimately, even if you had your stop below the fair value gap or even below the breaker, you probably would have got stopped out there. If this was a 1 minute chart, you'd have to go below the lows. So your best bet on one of these would be to, at the most recent swing high, take your profit. You come off the breaker, you'd be okay to go short here, but you'd want it to go past this candle first. So that'd be our bearish, even though we are bouncing off of a bearish. And we haven't taken a new high. You could play off of that one and go ahead and go short here, but you wouldn't want to aim for too low. Maybe this one, maybe just the top of the breaker. We still don't make a lower high, a lower low. So we can still use this breaker. Once we start closing above it again, enter in this fair value gap. Well, we started closing above it right here. And here, but no fair value gap. Not until here did we make a fair value gap. You could enter in this fair value gap, and you would only be able to aim for the most recent swing high or that gap. We come back down, we make a higher low, still same breaker, fair value gap. Here you can enter, we're not above it yet. Here you can enter and you aim for the most recent swing high. Maybe you leave on a couple of those runners and see if we take out those highs. All right, so then that brings us to this guy. Now, do we still use this breaker here? We're several days ahead now. You could still use that breaker. We violated it. Maybe we don't use it now. Maybe we move it to the last up close before the run on liquidity would be here. Last down close, rather, would be here. And that one respects it pretty nicely. Yeah, wick into it. Candle body's respecting. We did have a fair value gap here and here. This one provides us an entry. And where do we aim? We go all the way down. We blow through that breaker with no problem at all. Oh no. That's very interesting to me. Okay, let's delete it. And let's look at a 1 hour time frame. Okay. Now we're going to have more highs and lows, more reversal points. We were using 4 hour highs and lows as our reversal points on the lower time frames. That's what we've been doing. And you could probably incorporate daily highs and lows on the 4 hour to get your reversal points and your breakers. Yeah, okay. So I don't even know where to start on this 1 hour. let's just start where we ended. Man, yeah, I don't even know where to start. Let's just start here or here. Okay, so let's just say we ran liquidity. Man, it's hard to figure out where to start. Let's say we ran liquidity right here. Okay, it's right here. We ran some previous liquidity, even though we probably didn't. Or we could even start here. We ran some previous liquidity here. This is so rangy, it's going to be hard to tell. But let's say this is our last down close before the run on liquidity that we can't see. Once we get past that, candle bodies start closing below. Hopefully there's a fair value gap. There isn't. There is no fair value gap except way up here. So you could use that one to play off of, but where would you enter? We did not go down and run any short term. We just ran this little bitty range here. So that was not a good place to start. Let's go back this way now. Okay, so here's a big run up. The last down close before the big run up. This is actually a little higher high. So we would use this guy right here as our breaker. We push through with a fair value gap. It gives us an opportunity to enter right there. We aim for the most recent swing low, which is right here. That would have been a real nice liquidity grab. You could even, if you wanted to hold on tight for a little while, aim for one of these down here and you would have got it. Maybe you had that fair value gap marked and we got all the way into it. So heck yeah, that works too. Let's try another one. I'm going to get rid of that. Let's try one to the upside. Right here. Okay, so coming down, we sweep this liquidity. Our last up close before the run down is this guy right here. That's a big one. Let's mark it purple. We'll just mark the top in the interest of time. Okay, so we push up, try to validate it, don't quite make it. Come back down, make a higher low. Then we push up above, finally get us a fair value gap, come back down, touch the breaker to the tick, and adios paya. Where would we have it? I think once we touch the breaker to the tick, I'd be ready to jump in, fair value gap or no. Let's do this. And where would we aim? The most recent swing high. Booyah. We'd get it too. Adam, I think you may be onto something. Just don't know if we have deep enough pockets to play with it. Let's get rid of those. And let's go to a 30-minute. Okay, we'll do a different set so we already know something's going on with these. We'll go back over here. Let's see where some liquidity was grabbed or left. All right, so here's a liquidity grab right here. We clearly see there's one here, it gets grabbed, and then this one gets taken. That one's actually looking like a lower high, or does it take it? I can't see it. We'll just focus on this one right here, okay? So we grab that liquidity, the last up close before, it's not even going to give us an opportunity to enter on this one. So maybe this is a bad example because we just get above it and we run for the freaking hills. You might have been able to get an entry there. It doesn't even come back down to the fair value gap high. I mean, one tick above that red candle's bottom, it wouldn't even enter you. So that one would have been hard to get an entry on. So let's find a better one. We could even, let's say this one was our high. There's no red candle till we get all the way down here. That one would have been difficult to work with. just such volatility, it's hard to say. Man, look at that run up. What are we running towards? Yeah, we're just having just straight run ups here. Let's look at it from a bigger perspective here. A lot of these runs on these 30-minute candles are just directional. It's hard to get a good read on a breaker. And we've just been kind of going trending up, up, up. So this is the only one I can see where we took a run on liquidity right here, that high, and of course this high and that high. Well, I guess we can just look at the same time frame that we did. We can try this one first. But I can tell you right now that breaker isn't going to get respected, because this one, even though it left it, there would be a lower high. Didn't quite make it there. Okay, so this would be our breaker. The last up close before the run on that liquidity. Right there. We pushed through with a fair value gap. We respected it. Where would we be aiming? Well, if you know how to read fair value gaps, you could aim for this fair value gap center on that higher time frame, and that would be your take profit. You could call that your liquidity. You would have gotten there. We didn't. We even violated it a little bit to the bottom side. Maybe that could be your take profit. We come back up, and I believe we made a lower high there. Pretty sure we didn't take it out. Yeah, we left it by a tick or two. And so then we have this as our breaker. Funny how they correspond. And then we push away with a fair value gap. We don't give an opportunity to enter there. If you put a static order in, this one might have filled you right there. If you just put a static order in and we're patient and you're waiting, this one definitely would have filled you. And then we could aim for lower hanging fruit here. I don't think we quite made it to that one, but definitely here. And then we reverse. We can get rid of that one, and we can put in a new breaker right here. Mr. Mauve coming up. This is some pretty good chart homework, isn't it? Okay, so there's the top of it. We push through with the fair value gap. We're respecting the center of the breaker. I think we're respecting it 100%. No candle bodies are piercing below. That's a pretty nice thing there. Good, good, good. We come to the bottom, but the candle bodies, no issue with the candle bodies. Here, we don't really have any fair value gaps to the upside. We get one right there. If you would have entered right there, you'd have got smoked. But don't let that, that's your trading plan. It's okay to lose when you're trading your plan. It comes back down, respects it. I think this happened to me on Thursday. I ended up killing the trade. I think I was up quite a bit and I killed the trade. And then it came down and touched our breaker center to the tick, started back up, so I got in. So here you would be, as soon as we start getting these fair value gaps to the upside, I don't think you could get an entry until right here. It's still not. On a smaller time frame, you would have been able to get an entry, but we're looking at this 30-minute. So once these fair value gaps start forming, you can just jump in, hold on tight, put your stop below the breaker, preferably below the candle. That's this big fair value gap would be the ideal spot. And then you just let it ride to the most recent liquidity. So you could just take your profit right there. If you're feeling really special, you could take it here. And it would have gotten there. And I don't think there's a higher high you could aim for unless you go way back to larger time frame highs. And I exceeded my 30 minutes. But So I went through a weekly, a daily, a 4 hour, 1 hour, 30 minute. And that I'll say, there's some credit to it. It does. My issue with it was these 30-minute candles are way bigger, just for stop placement purposes, are way bigger than what I'm comfortable with on a stop. So this 30-minute candle that we would have to put our stop below is 266 points. On one micro, that's going to be 500. Oh man, that's a lot of math this early in the morning. $532 on one micro to get the stop below the candle, below this fair value gap. $532 on one micro. Would you make a lot of money? Absolutely. And maybe that's the way you want to trade it. Maybe 30 minutes is too much. Maybe a 15 or a 5 would yield the same results. The larger the time frame, the larger your stop is going to have to be, but the higher your potential for earning. So I would say yes, it does seem to respect it. Maybe not as accurately as the 1 minute. Maybe it overruns by 20, 30, 50 ticks. But I think with a small size, unless you have a very, very large account, I think with a small size and a large stop loss and a large take profit, you may be able to get 10R on this stuff, risk 500 and get 2,500 out of the deal. It is certainly worth something to back test. I've only looked at just a couple of days here, so I would look at it on larger. I don't think you're going to be able to go on a weekly chart. That's just too much movement. But possibly on a 30-minute, 1 hour maybe, might be able to get some possible entries. But as for me, I'm thinking using the 4 hour highs and lows, maybe monitoring in a 15-minute. And then once we take a 4 hour high or low, move to a smaller time frame and look for a reversal pattern like what we're looking for on these bigger time frames is the way to go for me, because I can fine tune my stop placement. I think the patterns are going to be present in most time frames. I really do. And I think they're going to be respected pretty well too. So I'm going to leave those other time frames for you, for your chart homework for the weekend. And I'm not going to put a hypo up. I think when you look at this, when you look at those time frames, like the weekly, you'll have a pretty good hypo all on your own. So remember to be kind to yourself, be kind to one another. Love each and every one of you. Until next time, trade well.